The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. We're back, and another day, and this is the 16th of December, midway through the month. Very interesting. Dow's trying hard to climb up. It's at 19,895, up 43. S&P is just barely higher, up 0.42 at 2262. 2282, of course. The comp index is up about 2 at 54.88. This is going to be very interesting. The VIX index is at 12.59. It hasn't gone into the 13s. I think by the end of the day, maybe it could try for the 13s. Now, this is going to be important to watch. We've got gold up $1 at 11.30. And the question I had was from someone who's been short gold for a while, should I continue to hold here? Well, if I look at the DZZ, which is 2 times short the gold, I'm going to be very conservative and say this is probably a leg F in the daily. It's holding very well. If you look at it and you put it together with, say, the T and X, which that's the 10-year, I have the same kind of count, leg E right now. I'm thinking that the yields are beginning to get just to the upper end, and they could stop rallying from here. But they don't have to drop very far. I don't think gold has to rally very, very much. But I think it's in this area that the dollar, which needs only one, let me just double check. Yeah, the dollar needs, it's in leg C. If there's no new high above 103.56 today, then the dollar essentially will make a peak C, and then by early next week, by Monday or Tuesday, it could go up to a leg D. And then I think the dollar's going to take a bit of a breather. The technicals are not quite as strong as they were when they went to the last high at 102.05, and here we are at 103.15, having gone to 56 yesterday. So we're just about to get there. A couple of things that I need to go through. This is a very mixed market, and I had questions about, what. You're lying, you're short. What are you doing? Well, we've taken the profits in our IWM, but IWM, which is the Russell 2000, we just missed by a few cents going back onto the long side today, because I think there's a chance that in this mixed moment that some of the stocks that didn't finish, or industries that didn't quite finish their leg D to the upside, could do that while the stalling process and not a breakdown yet of the Dow and the S&P and the New York Stock Exchange is taking place. So here we are. We've got a peak C at 138.82. There's that little, it looks like a plus sign right there. Let me move that away so you can see it clear. There you are. That's your peak C right there. And I think we will go to 138.83. It's a good chance by early next week, while the Dow and the S&P just kind of chop at these higher levels, but they are showing all the stocks. The question was, wait, how can you be long, short? Because that's what I'm looking at here. For instance, we are still holding GE long, and it's holding quite nicely. It hasn't broken out above 32 round number high. I'm tightening the stop. It's not a big deal. How can you be long something like a General Motors when rates are going up? Well, it just hasn't stopped. We were very lucky to get in way lower, and we've got a very small position, but it's fine. And that's the way I'm trying to deal with this. It's not easy. The SMHs gave a pattern. On Tuesday night when I do my next webinar, I'll be talking about this very pattern here. A peak C1, C2. I said a double top at 72.70. I thought maybe it would be a more significant top because the MACD was just about to turn down, and stochastic was right at the 80. I think at that time it was at 86, and looked like it was in a pullback. Instead, it did fulfill the leg D to the upside. I was looking at a stock like CTAS, which is Cintas, which I consider a very important economic report type market. And it right over here, and it made the peak C. It ran up to leg D on Wednesday. Yesterday went to leg D, and I think today is probably making a peak D. I'm looking at these a rolling series of tops And because it's a rolling series of tops, that means that some, especially in the Chapman wave methodology, where I do expect those Ds, that you can get this rolling top that has to wait for all the little birdies to be all in line before you get the pullback. And that's really what I'm looking at. I could be wrong. There's the V-shaped pattern I'm looking at in Syntas called the Groucho Marx formation. There's a spike up to a peak G, and then it failed in the 120-minute chart. It hasn't given any signals of breaking down yet. It's holding the 9-period moving average, but the MACD is turning down. It hasn't crossed negative. And I'll be there on Tuesday night. We start the whole process. I've got it right here. I wonder where this is. Yeah, in my webinar, we're talking about all these different things, how the MACD is used, etc., how it goes from a buy signal to a buy mode. Very important phase. We've gone from the naked charts to dressing them up with the labels, as well as the trend lines, the cup formation, the arch formation, etc. Now we need to add some more things like the 9-period moving. Look at that black line, how it's beautifully held. The CTAS moved to the upside. Syntas core trading at 120.18, made a high yesterday of 122.21. Now look, if I go to my shorter term charts, look here. You know, we always talk about the peak Ds. There was a peak C minus failure, which is be careful, you can pull back very sharply. So this is the March contract. It went down to a trough C and then went to peak ABCD right there at 1840. That's 20 to 9 in the evening. On the 15th, went to 2261.25, pulls back, chop, 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 breaks down, and it starts a brand new ABCD. And this morning, it couldn't hold the high. At 8:40 this morning, it went to 2264 round number high, and look, it's pulled back, trough. That's not a trough. You have to wait until after you make the peak. So that's your first trough right there. I'll type it in. This is an A. Whoops, that's an A, and that's a B, and we do have a short position in the S&P. So here we go. Looking at the, so I want to go on. We're going to go back to, we're going to go to gold. Gold right now is trading, it's about unchanged. It's less than it's at 0.6 higher at 11:30. And it's trying its best to rally here. I think it's going to be going lower, but it might have a bit of a bounce first. So so once again, looking at the DZZ, because there's an alternate count, I think you've had really good profits. It's money management says, hey, you can take off something here at 7.06 in the DZZ. I don't believe that the person had the DZZ. I think they're the 3 times short, but this does the job because it's the inverse of the of gold itself. So this is a nice indicator. So I've got an F. Technically, because the MACD is still strong and the stochastic is still strong, I should put the chance that this is really an F/B, and it could recycle higher. That's just the way it works in this methodology. But I'm thinking that there's a chance that it could be pulling back, and that's all money management type, because the 200 period it was hitting the weekly chart in leg D. All right, so we're looking at now the TLT. It's the same story. The TLT is trying to form a base here. I think it is. Didn't hit the right key. I'll be right back straight after this break, and we'll continue with the looking at these different indices and why I'm talking about this rolling top that's occurring right now. Basil Chapman, Tiger Technicians Hour. We're right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So just the question in the Den IWM 10-minute chart. Look, you've gone peak A, B, C, and there's your D, and you pull back sharply on the D. You go to trough A, B, C, trough D. All right, there, A, B, C, D. Now, there's going to be a big question here. I normally, to be conservative, I don't use them anywhere close to what I used to. I just avoided it as much as possible. But this 2-bar parallel high, I would normally say, hey, if I'm 10-minute trading, I want to be a little bit ahead of the game. And I would have called this a phantom peak. I would have changed the color to red or pink just to make it different. And then say, okay, then that's the C right there. That's a good C. And this is a D. But it's only a D because I've called that a phantom peak, legitimately so, and I want to be ahead of the game. So if I'm in this, I'm already saying I'm either taking a little bit of profits right here, and I'm going to put a stop in. Maybe it depends where you got in, but maybe below this low right here at 136.87, it's trading at 137.15, and that says I'm out. And it means, and that's what I'll be teaching on Tuesday night, how you can use the phantom peak. There's only a limited time, an hour and a half, but I'm going to cover the MACD stochastic. You see, I'm not using that here. I'm trying, over the last year and a half, I've worked really hard at trying to do what I call the naked chart. In my mind, I've got a sense of what I know what the MACD should be doing, the stochastic, but I'm trying to just develop the pattern as close as I can to what the chart is actually saying. And that's what we're looking at here. All right, so just add that question. Question here again is CL daily. Is that crude oil? No, I think that's CL. Are you talking about? Oh, what did I just hit? Oh, I didn't mean to do that. Whatever I did, didn't mean to do that. Oh, I just put it in the wrong place. That was silly. Yeah, Colgate, you're talking about Colgate, I believe. Yes. Oh, crude oil. Yeah, I'm talking about crude oil because Colgate's not looking all that good. Let's go to crude oil, CL, the continuous contract says, yeah, we're rallying somewhat, but we did make a peak E. You remember yesterday I said I couldn't put anything but a plus sign, a red plus sign at the top of the peak E because it's suggesting to me that the seriousness of this pullback has gone below the 9-period moving average, and that did affect the MACD, the stochastic, which went underneath 80% yesterday. But the MACD still hasn't turned down, and that's saying there's enough internal strength that I can't legitimately go with a down arrow, even if it does break down after that. That's just the way the methodology works. And if we close below the 9-period moving average for one more session, I will put a down arrow and say, okay, MACD, you're probably going to follow. So that's the way it is right now. So let me just give a little summation here, because the TLT is the only other thing we haven't got. The TLT is still acting very weak. It's down 24 cents at 117.17. If you look at the way the bonds have held, I'm just suggesting to you, just be prepared that the bond yields are going to hold pretty high, and we haven't broken to the 30 over the 31.98 level, have we? No, we've gone to 31.97 this week. 31.97 is a new high. So 31.97, right there, we're changing it. 31.97 says that we are now we're above, just a fraction above this trend line. And that's just saying to me that there's a very good chance that the yields are saying very clearly that there's been a recycle and that there could be some choppiness to the side, but be prepared that yields are not ready to drop dramatically. They can drop a little bit. I don't think dramatically just yet. So that's the issue. Now, why did I spend so much time? I think I've covered everything I wanted. Why did I spend so much time? Oh, we got Ben in Tallahassee. Ben, how are you?
Hey, Basil, good. A couple of quick questions. I've only got a few minutes.
Okay, yes, let's go.
GDX, I've got trough Ds in a weekly and 120-minute. If you could confirm that, and then the second
Correct.
question is what you have in the daily.
Okay, so
Thanks.
the daily. So let's just do this. The daily at this particular point has a G/C, and it's a combined G/C. And that's saying very clear. Oh, let me just double check here, because this could have been just fractionally lower. 20.13 and 20.14. Yes, exactly right. So this is, for me, a case that says the MACD is still very weak. The stochastic is really, I thought that maybe there would be a little bit of a turnaround. There's been no turnaround. The on-balance volume is turning around. I'm looking at this and the gap down. This is a very important day. You've just got a moment. So I'm just going to say to you, do you have a position at all, or you're looking to have a position?
I don't, but I remember looking at energy, specifically oil, in the beginning of the year, and I was keeping a closer look at the weeklies and the monthlies, and everything looks horrible in the 120 on the daily, but when you start seeing trough Ds and Es, and you start nibbling, I could have made a fortune, but I never did, and I hate to.
You're talking about on the others, not on the GDX.
My point is, I used USO as an analogy.
Okay.
And when the GDX starts making trough Ds and Es on a weekly, right? The longer term.
Then you're ready for something, yeah.
Something's got to pop at some point, right?
Right.
And,
okay, so this is, Ben, you've only got a moment. Let me just sum this up as quickly as I can. I think the dollar could have one more bounce to the upside. My estimation is that I was going to do that the very next segment, but now you're on, so I'll do it now. I think the GDX is getting closer to a bounce. I really can only call it a bounce at this particular point, but I don't have any indications other than the 120 minutes trying, and it's a flat stochastic at 9.9. It hasn't really given that V-shaped pattern that I like to see. So I'm just going to suggest if this is a new position, you're going in at 19.10, I just wouldn't take a risk lower than 1868 is even too much. I would just say if the GDX hasn't really taken out yesterday's high of 19.35 by the end of the day, you'll have time, because even if it gaps up, there's just so much on the upside that you can do on a percentage basis. 2020 is the 9-period moving average. 2096 is the next resistance. So I'm going to say that if you're in it right now, I would put my stop fairly tight. I wouldn't even put it lower.
Yeah,
Okay.
I didn't buy anything yet. I was just looking at the trough D on the weekly.
Okay, so the
And-
trough D on the weekly is with a flat stochastic, and it says, yeah, it could bounce, but it's nothing exciting just yet. The daily is failing to actually activate the turnaround in the stochastic, so the price is going to have to lift it. I'm going to say to you, if you have patience, at 19.36 above yesterday's high, I'd start a little nibble on that. At this particular point, I'd have to wait until that happens. Hope that sort of solves it there.
Good. Thanks a lot, Basil.
Okay, thank you for calling. And now I'm going to go to the question that I posed for myself, and it's this whole thing about the Dow. There was a 2-bar reversal yesterday. I called it a Chapman wave 2-bar reversal. I've got the 120-minute chart. We're about to go to the break. I'm going to spend a little time on this when we get back, unless we have some callers. We don't right now. So I'm going to talk about this in a short while because it's really important in terms of what I do and why I'm thinking that there is some kind of a top being formed right here, at least on the short-term 120-minute charts in the Dow. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 17 now. S&P's down 3.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I had a question about the futures, but let me just do this. Remember, we were talking about the IWM, and I can't even remember now if I typed it in, but I did this if I was talking about it. I was asking about the IWM 10-minute. I'm not sure. I was asked, but it was there in the den. So I just did the work, and I was talking about it, and I said that there's a phantom peak that I use because I want to be ahead of the game. It's a technique I developed many years ago. And look, there's that D. I put that D in and I said, you want to be ahead of the game. That's where I started to take it off. Look at the move in the IWM futures. Now I can put a down arrow. And if otherwise, I would have been waiting for the leg D. That might happen now with the TNA, right, with the IWM. So look at that. And that means that that's a legitimate down arrow. And that I had every reason to be cautious right there, thinking that was a peak B. Then the question was EUR USD. Let me just do this real quickly. I don't want to run out of time because there's a lot to discuss today. So right there, edit, C, and done. So that's C, and yeah, you get your D because it didn't break the low. There's your D. Then it starts to brand new A, B, C, D, A, B, C, D. And now we started a brand new A in the euro. In the euro-dollar currency pair, I was asked about the short term. So this is it. There's your D, there's your D, there's your D, and there's your peak D. So all of these we're teaching this course coming up, the continuation of the course. Oops, I'm sorry, it's right here. The course coming up on Tuesday. We've already had one. It's archived, so you'll be able to go through all the basics that we discussed, and you'll be able to go through these things. Now, I just wanted to quickly say I'm behind on the dollar, so I might be looking at the dollar now, and the dollar is at 103.17. Let me see what it says here. I just want to check. The dollar is now down 16. So you see, this is going to be very interesting. Because let me go to the GDX because we just had Ben on the phone and I said, if it goes above this high right here of yesterday of 19.35, we're at 1916 on the GDX. So this is the reason why I wanted some veracity. I wanted to know that I was at least starting to make a leg to the upside. This is not a leg to the upside until this bar right here. Let me expand this so you can see what I'm talking about because I love doing this live. That way you can see my techniques. So 19.35, it needs 19.36 to actually start a leg because it's got a higher low. So this is a trough. So that can be a leg. And in leg D, as Ben was saying, that's where you often start to get a move, leg D down, and leg E on the upside when it concludes. So I don't like the flat stochastic. So this is early in the day. We're only 2 hours and 2 hours into the session, but we'll be watching that, all right, real closely. All right, I wanted to get that out the way. Now I wanted to do the question that I had was, lost the question. The question was, the EUR USD. I wanted to look at it on a, there are. So it's almost the same thing. We're looking at, this is a trough, maybe a trough E. The stochastic hasn't even turned up yet. And the MACD is better than, way better than it was before, but it's still not turning up. And you're in a leg E, and you remember I drew this in some time ago. It's called the Chapman Wave Inside Wedge. We'll be discussing that in my program on Tuesday night, the second of the webinar series. See that I drew this line? I try to join as many points of contact, outside points of contact, and it took me to this, and it also joined in the left side, right side price time match, which extended to the right a little bit. And here we are, we're right there, but the stochastic's flat at 10.28. I still think that the dollar has upside to go. So this might be just a short-term blip. I might be missing completely what's going on because I'm 15 minutes delayed. But the euro is in an area where it should start to form a base, but you need the stochastic not to be at 10.28 and flattening. It needs to be at 13 to 15 and rising. That's the way it's going to do it. And you haven't even got this, the histogram in the MACD, these vertical lines, shrinking yet. So this would be just early. It would be saying, hey, there's a bounce, but probably next week, if we do get this shorter term sell signal that I'm anticipating in the general market, then we'll see what happens. Because then I think you're going to see the TLT have a chance to rally. It's had a huge move down, but that rally is in the context of at 117.30, even to 122. So you'll see yields come down, but they'll only come down to where they were about 2 weeks ago. And 122.89 is the 9-period moving average, and the 122, I think it's 64 or so, is the 200-period moving average in the weekly chart. So 5 points huge, but look where we've come. We've come from the 140, I forgot to type that in, 143.62 high. back in July. This is a whopper, down to 117. This is a big move. So yeah, we're getting close to at least some kind of a bounce. Oh boy, that was a lot of work. Now, a couple of things I want to look at. Amazon. Amazon's telling us that, I don't know what it is. Maybe it's going to be, look at, let me put the tie together. You know, I like to do that. Some people look and say, geez, you just, in 3 minutes, you just went through 5 charts. They're all related. Nothing here is ever, it always stems from a thought, and that thought is directly related to, I'm looking at Amazon. What would you think of when you're looking at Amazon? Wouldn't you think of Federal Express having made a peak F and a strong down, couple of down candles? Look at the candle that's going to be formed today. Look at this evening star, or look at this inverted hammer. It depends. We haven't closed yet, so we don't know what it is. Leg C in the monthly, maybe it's a E/C, but in the meantime, back at the, no, it can't be because we started off, no, this has to be C, so that's still very positive. And what about UPS? UPS is United Parcel Service, peak F top. Look at these candles. Leg E in the weekly. You know what? We might be surprised that things are at Amazon. Finally, let's look at the retail. All of this is related. Remember, I might be jumping around, but it's all related to exactly what we want to be talking about: sales, Christmas sales. And this could turn out to be that pattern that I talk about. Is the double hump, we call it. Like a camel, you know, some camels have 2 humps, and that's what we call it's the M-shaped pattern, the stochastic M-shaped pattern in the MACD, where we got this back in October of 2007 in the weekly chart. The reason why I had to wait before we got the sell signal was because there was a pattern that said you could go to 2 more peaks and then have an alternate count, an F or a G, and then have a sharp pullback. So this is going to be very, I shouldn't have put that down error. It's a little presumptuous because we haven't crossed negative yet in the MACD. So I'm putting a plus, and we haven't crossed at least 2 times under the 9-period moving average. So I'm putting a plus sign on the retail index, and it's saying, yeah, it's holding well, but we're going to watch it closely. Retail, I was suggesting recently that that's the retail stores that have the physical outlet, that is they call them box stores, rather than looking at the internet sales. I think that they must be doing a lot better, because that's what the chart is saying. That people are shopping, trying to find boxes in some of the malls around here. I'll be back. Basil Chapman. Dow's up 17, is down 1. Tiger technicians out. Very important. We'll see what happens. Have you made a short-term top for more money?
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, a bunch of questions came in. So here we go. High-grade copper. I didn't get to that. I usually do. Peak E in the weekly. Leg B in the monthly. Peak F. Now it's confirmed. You see, I have to wait for these things. Parallel, high bar, MACD, everything. I suggested that this does look like it's going to make a rectangle and then break the lower level. It's very close to breaking. This is what the Dow pattern that I was looking at in the 120-minute chart says. It didn't break the low of Wednesday. In this case, the low of the 30th of 2.5505 being challenged right now, 2.56. Real close to taking it out. I'll draw the rectangle pattern. I didn't have a chance to do that before. Right there. And that's what we're looking at. And there's the pattern that I call the H pattern right there. Another thing we're going to be talking about over the weekend, over on Tuesday. I might be sending out to those people attending my webinar course some charts over the weekend. I've already got to send you the completed ones, the naked ones that we were drawing, the trend lines, etc., and the ledgering. And I'll give you some other things. I want to start you on the MACD and the stochastic beforehand, so when we go into the webinar, I don't have to take too much time discussing it. And let me just go back here for the, and folks, there is time. Hey, go to the front page of TFN. We have this, it's Tom O'Brien. He put together this fantastic thing a number of years ago with the Salvation Army. It's a 25% bonus for everybody concerned. I mean, this is terrific. Go to the front page of TFNN. Check it out. It is the TFNN holiday season. Let me go there right now so that I can get it exactly right. It's right here, and it says right there, Salvation Army Tiger Dollar Sale. You get a 25% bonus and a 10% donation in your name. And then we've still got the course up here, Simple Technical Tools to Analyze Charts, a 3-part course on the Chapman Wave methodology. We've done one, and one is archive. So if you sign up now, you'll get the archive, be able to do it. The core of it is very simple. As I always say, you're looking at this particular pattern right here, and let me find it for you right here. This is the crux of the matter. We do our best to try to always follow this waveform. Don't always do it, but we try. Peak A, B, C, 4 peaks, and then something else can happen. Did we just see that live? We just saw that live. What did we do? We looked at, right here, we looked at the IWM. IWM, and look at the sharp pullback, and that's that peak D again. All right, so now let's get out of this, and we want to go to a couple of things. I had a question about, so that's high-grade copper, and the question also involved FCX. So Freeport McMoran made that peak F. Oh, that's what I was discussing, remember the other day? So that was a peak F in Freeport. So now it's pulling back. It broke that rectangle support, and it's pulling back quite sharply. It's made a D. I think copper is just on the shorter term It's kind of done. Looking at that monthly, I'm doing a lot of work on the monthly of copper. Has it begun a bigger move to the upside? Is that going to help us, etc.? So here we go. And the next thing was Swift. I haven't looked at Swift for ages. I just did it in the break. I did a quick daily, weekly, monthly notation. It's at peak E. It's pulling back sharply. Swift, it's transportation, and I believe that's trucking. I don't think that's trains. I think that's trucking. This is very important. This kind of goes in with what we're looking at. And this says that there's some kind of a pullback. That's the reason why I looked at CTAS and I say, hey, we might be just starting some kind of a bit of a pullback here in the economy. Just it'll be noted. We'll watch CTAS closely. We're watching IYT, which is the transports, which has made a peak, maybe a peak F here as well. A leg D, it's a peak D this week. There's no way it's going to go above 170.90s at this point at 165.94. So this is a peak D. So we're going to be looking. That's the reason why I think that we are getting toppy here. It's the reason why I have to have different positions for different situations. So question so that was Swift, and what else was that question about? Swift, transportation. Yeah, I just did the transportation index. So now a couple of questions came up. Give your opinion on the IBB. So this is the IBB right now trading at 273.48. We bought a small position of the short of the at 270. What did I say the other day? 272, got stopped out at 274 for a very small 2-point loss, less than 1%. But really what I was looking at is this particular candle here, right here. That's the IBB's, the iShares NASDAQ Biotech ETF at 275.39. If we close decisively above that, there's enough energy to push all the way to the 281 area, the 200-period moving average, before maybe coming down again. And what did we do? We went to 275.58. So the only reason why I wanted a tight stop is it had to fail right away. It had to be an in and immediately pull back. We've got one stock like that right now that we've shorted. We're waiting for. We had a fantastic profit in it. Now we've tried to reshort it. At the price we actually got out in. And we're going to see very quickly whether or not it works, because it's got to work right away, because it's had a nice recovery. If it recovers even more, it means that maybe now it's turning the corner, wants to have a really good bounce. So we'll see. But so far, we've kind of been lucky. We've got the right price, and it's pulling back. We'll see what happens. Now, a question. So the IBB, to make it very simple, I'll say that again. A close into the 277, 278 level will say, other areas might pull back, and the IBB, which has just been hammered, could have a rebound, a little bit of a rebound. I'd see maybe 6 points higher if it can do that. But the arches in the weekly chart suggest they're just going to be failure patterns, and at some point we're going to break down even deeper in the IBB. But to know that on a short-term basis, IBB has to go under 267. So that's 6 points low. I don't know what's going to get it there, but that's where it would have to get, and then it starts down again. So that's the IBB. When driverless trucks are, yeah, that's going to be very interesting. Mike asks, CCJ, sure, that's another copper stock. CCJ is the copper Chemico. Am I wrong? I think it's a copper stock. See that V-shaped turnaround? That is really good. Just if someone will just tell me what CCJ is, because it recycled. Look at this. It made a peak D. It had 1, 2, 3. It didn't have an instant restart, but it started over again. I'm going to put that as an A right there. A, B, C, D. And I'm not sure. I'm calling this an E for now. But what a stupendous. Wow, that's a beautiful A in the weekly chart. Chemico, somebody tell me. I'll do it right now. Chemico, that's CCJ, Chemico. No, what am I doing? I didn't do. What happened there? I didn't mean to update anything. Oh, bye. Don't do that. Don't do that. Oh, there it is. Chemico, uranium. Oh, okay, uranium. I forgot. Yeah, uranium is doing very well. That is a new leg A. Completely different chart to the other commodities. This is really good. The monthly chart is starting to move very well. Now, what I'm going to say is if you're long, stay long. All I would say to you is if you're long and you're low from lower down, all I can do is say, so far, I'm calling this an E. It might have recycled. Everything about it was stochastic pulling back, and the MACD is still good. Says that it's probably an E. It could even go to an F, but I think it's going to be in a range between 11. CCJ is trading at 10.81 up 46. I think it's in a range between 11.25 with good support at 10.20. But if it takes it out, be prepared for 9.83. Maybe I'll do a little bit more on this when I get back. I don't want to do it too quickly. Basil Chapman, Dow's up 25. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
If I could, we just got enough time to say GDX did actually break that by a penny, so sure, that's when you can start that position. And I wouldn't get too carried away, but it could bounce. I still think the dollar has a little bit more upside, and then you got to be careful. This is the area where it's starting to bump into a lot of. I think it should be bumping into resistance. And as I say, the GDX trade, which is the gold miners, that broke out. GDX is now trading, I don't want to do two things at once. I will. GDX trading right now, 1941 up 42 cents. So it's gone above that by a penny, and that's really good. So yeah, now we can start to look at some kind of a balance for the gap. Getting then 2026 would be the strong resistance. I was asked about Whole Foods market, WFM, which is trading at 31.98. I think in the seasonal area, I think it has a chance to retest the high. And Sean said, I have puts have a position at 29.16. Okay, that's good. And also at 29 calls, but sold them. How does it look? I'm so pleased you sold the calls. Yes, it could go a little higher, but you really got maxed out on the premium there. I've got it as a chance in the cup formation of retesting the left side high of 32.54, and if it goes to 32.55, it starts leg D in the weekly chart, and I think that that's good. I would even suggest that I think that early part of January it starts to pull back a little bit. It looks more like seasonal. There's a lot of shopping going on. I think they're going to benefit from that. So, and the other thing is I had a question about what was it? It was a great one. Yeah, I got that. Oh, darn. JWN, which is Nordstrom, plummeting, down 4 at 51, down 7%, not looking good at all. Made a peak E in the weekly. And this is saying to me, retail sales overall, I think the sales are going to be very strong, but the profits, I think, it seems to me, are not going to be all that great. So as we're about to go out, let me just do this. I think this is a rotational area where we start to see the various markets and stocks, very important stocks, start to pull back. I'm taking it seriously, at least for the shorter term. I don't know if we get the December, January pullback like last year, but I think we could get some kind of a pullback. I want to be buying the next pullback. I think it's looking good for 2017. Meantime, the VIX is down at 1245. If it goes to 13 by the end of the day, watch out. I just think we got a chop day. You've got to see some follow through to the upside, some backing and filling. Monday, we can do a lot more about some of the questions that I had here. And over the weekend, I will, for subscribers, I'll be sending out my usual charts Saturday and Sunday, what we're looking at, why we're looking at it. And for the people doing my webinar, I'll be giving you charts to look at, to study, and I'll take questions over the weekend. Really looking forward to it. And if you want to still sign up, there's time for it. 3 courses, all of it's archived. And I hope that it really benefits you. So far, I try to do it live as well. We were looking at the IWM right now. It's now bouncing, but it did make a very sharp pullback from that, what I call the peak, phantom peak B. So as we go out for the rest of the day, don't forget you've got swimming lesson. You've got some great shows coming up. You've got, what is today? Friday, end of the week. Wow, good. We've got straight after Think or Swim, you've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien back again. Have a wonderful weekend. Really looking forward to going through these charts in a very quiet way this weekend, because I think it's going to be important as to what's working and what's not. Because as we go out, I want to look at the XLF just to see where that is. That's the bank sector, and I missed it. XLF, sounds coming up. Oh, peak D maybe. Yeah, I would not be surprised if we have some kind of a choppy sideways pullback, and that's the way it is. Hey, folks, have a wonderful day. Stay tuned for our fabulous shows. Go to the front page, Tiger Dollars. Fabulous thing for the Salvation Army. Wonderful work they do. I'll be back Monday. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.